Time for the latest earnings outlook now with Research Director Shiraz Mian. Shiraz, as we sit here and record this, the Q1 earnings season is just getting underway, just a few days old at this point. What are you expecting on the aggregate for S&P 500 earnings, up or down?
Down.
Down.
Total earnings are expected to be down a little over 4%. This is on modestly positive revenues and some contraction in margins. So fairly weak expectations, and they have steadily come down since the quarter unfolded. Expectation was for about 2% growth back in January, and they have steadily been coming down since then. Across the board, the weakness is there. 10 out of the 16 ZAC sectors will or are expected to have earnings declines in Q1.
All right, if this is a down quarter, it's going to be the first one in a year and a half. Is that alone, is that alone reason for concern?
Yes, it is. You're right. The last time we had decline expected at this stage in the reporting cycle was, I believe, in the third quarter of 2012. Eventually, that turned out to be modestly positive, and we would probably see something along those lines this time as well. But this persistent negative revisions trend that we saw in Q1, that we have been seeing for close to 2 years, has been and still remains a concern for me. We want the earnings picture to confirm what we have been seeing in the stock market for some time, meaning that a bullish market needs to be accompanied by, if not rising estimates, at least stable estimates. And we haven't really been seeing that. And companies, whenever they talk about the outlook, they talk about negative prospects in times ahead, and that keeps the downward pressure on estimates. So yes, it is a concern.
So you have, even before the season got started, you've written that guidance is going to be key for this Q1 season, and it has been for some time.
That's right.
So to clarify for the viewers, does that mean that the market's going to be keying in on CEO, CFO forecasts on top-line revenue, growth, profit margins, that kind of stuff?
Absolutely. And the reason is that the actual surprises on EPS and on revenue, since these management teams have refined the art of guidance and expectations management literally down to a science, they have lost their value and significance. So any quarter, whether it's strong, medium, or weak, we see about 2/3 of the companies beating earnings expectations. So it's not really surprising to see that many positive surprises. What is key is the guidance, as you rightly point out, and the reason for that is that while expectations for Q1 remain low, expectations for the coming quarters remain quite high. So the broader consensus view is that the first quarter of 2014 turns out to be the low point for earnings, both in terms of growth as well as the total level of earnings. And then we see an upward trajectory starting in Q2, ramping up in the second half of the year and then continuing into 2015. So overall earnings growth for the entire calendar year 2014 is close to 7.5%. And growth in 2015 is 11.7%. So a very strong ramp up in the coming quarters in back half of the year. And we need to see that reflected in commentary from management teams. They need to see and tell us that the outlook is improving, they see demand improving, they see top line improving, and if we don't see that, we will see a continuation of the downtrend in estimate revisions, and that, as I've been saying for some time, is inconsistent with a market that should be making so many highs.
So if we see that ramp up, does that mean that that's going to help set the stock market up for a more robust second half?
Absolutely. Then it would mean that that all the gains that we had over the last couple of years, which were in anticipation of a turnaround in the economy, a turnaround in corporate profitability, were for real, and the market was anticipating those gains correctly, and we are seeing then those gains show up. So, like say, if the financials start talking about loan growth improving, and the technology firms start talking about capital spending trends improving, then that should support the market, and that should push stocks higher.
Okay.
I don't think that's going to happen, though.
You know, I have to ask this question because that's the kind of person I am. Is weather going to be the buzzword in the CEO, CFO guidance commentary?
You know, you mentioned at the top of the segment that this is just a few days old. We have seen, by the way, results from 26 companies, and many of the ones that have some weather exposure have made it a point to point out that weather was the reason for their underperformance, whether it's Family Dollar, Pier 1 Imports, or any of the others.
So
and
I'll take that as a yes.
it is a yes. Hopefully, it just remains as an explanation for their underperformance in Q1,
Yep.
and they don't tie that on to their weak outlook for the rest of the year.
Yeah, quickly, sectors expected to surprise.
I'm hoping that we hear from financials, as I briefly touched upon earlier, that they're seeing positive trends on the loan growth side. We have seen some data that commercial and industrial loans are improving, that commercial real estate is improving. So I'll be very interested, and I'm really hoping that at least these big banks will lay out the groundwork for a positive outlook on those sides. And I am hoping the same from the technology side, that they'll talk positively about that. Overall, the earnings picture in Q1 is fairly grim.
On the flip side, sectors expected to disappoint. Everything else that you didn't mention?
You know, the expectations are so low that my feeling is that most of the companies will easily beat them. And if we see even weakness relative to what is expected at now, then we're probably really in trouble.
All right. Well, thank you for that. We'll try and check in with you as the season progresses. In the meantime, in between these video conversations that Shiraz and I have, keep an eye on his written commentary that you can link to right off of our homepage at Zacks.com. It's called Earnings Trends. And every Monday, he leads off the week with his earnings preview commentary in written form as well. Then, as the season progresses, on a day-to-day basis, he will key in on little nuances, changes in what's going on in the season, scorecard updates in his Ahead of Wall Street comments, also linkable, if that's a word, from our homepage, Zacks.com. With Shiraz, I'm Terry Ruffalo.